Welcome back everyone to the Sandpit. You're here with Sandy tonight. Tonight we're going to go through Fibonacci, or Fib for short. Now, there are a couple of different ways we can go through the Fib. I'm not going to go into the detail and bore you with the maths behind it. Basically, I really want to show you. I'm all about showing. If you want to find out what's behind it, I suggest you do go and Google it and go through it yourself. I know how to use it. I have a rough idea of what's behind it. It's, to sum it up, it uses a ratio from when you drag. When you stretch your Fibonacci out, it takes a ratio and works out all the different levels where you've dragged that Fibonacci across. We have an extension, which we use from the base to a top, and we use it to find levels higher than where we normally finish with it. And a retracement is where we drag it from the top of a trend down to the bottom of a trend and use those levels or trading zones. And we also like to see levels below, and mainly we use it for what I use it for is levels above where I can't, where I don't have any data. Sometimes I just pull lines very quickly. If I need to chart something quickly, the Fib is the best tool. I can chart something out in roughly 10 to 20 seconds and know where things are at. So bring up the screen here. We're going to start with Atom tonight. I'm going to go through. There's like 4 different ways you can use them. There's 2, the extension and the retracement. You can use both in different ways, positively and negatively. For those new to it, how about let's just work on positively. So I may as well just get straight into it. So in TradingView, for those, this is my favorite tab here, but in TradingView there's a bar over here. It's normally the second one down. And you've got the, can't even find it, it's been that long. You've got your Fib Retracement and a trend-based Fib extension. If you want to keep them up in your toolbar, you can hit the star. Don't forget to check out my TradingView for beginners. We go over all this kind of stuff. We're going to be using the Fib extension. This one here, the Fib extension. Now, time frame. Time frame is a huge deal with the Fib. Depends on how big, how spread out you want your levels. You understand that the daily is a large time frame. If you drag, you look, let's just go from down here. So it's always from a low point. You need to go find the lowest part of a swing to the highest part of a swing to get all the levels. So left control to pick up the wick. Left control, you can see it snaps to the wick or magnetizes to the wick. Now, when you pull a Fib down, you can adjust it to where you want. But what we want is we want the range from the end of the tip of that wick to the tip of here. So I'm going to pull this line down. It doesn't matter how far across. It just matters where you want to see the Fib on your chart. The middle of this circle is the bottom of the wick. So we want to pull it down so the bottom line's around about right in the middle of that circle, and we snap it there. Now what that has done is given me all major levels between that point and that point. So $41 worth of crypto. These are all of our major daily levels. And this is great. Daily levels is good to have. You can see how true it is because it's actually picked up brand new data, and it's hit that Fib on the way up. And like I said, if this run up wasn't actually here and we Fib to there, then this would be our next major level we'd be looking for if we had a major run up. This would be a selling point. This is great, but you take this down to 5-minute time zone, you can see The levels are way too far spread out. For day traders, you kind of want to have levels that are going to work with you for, the next day or so. So if we go back out and have a look at our trends, this is where we might want to use the Fib Retracement. Fib Retracement will give us levels on normally the closest previous data. So this is, you can see the last trend here. For those who don't understand what a trend is, it's from a low point to a high point. So let's draw it here. Let's look at this swing in here. So a low point would be this candle. Let's zoom up down here. Low point would be this candle here to the top of that candle there. So $16 would be that swing. Okay. And then if we were looking for another swing, a downtrend swing would be the top of this candle all the way down to, looks like the bottom of the swing is here. You can play with it, try and choose different kind of wicks. For me, for those of you who are in the VIP and have seen my callouts, it's bottom to tip and tip to bottom. Sometimes I will adjust them a little bit, like 20 little bits, but not a lot if I need to. So a retracement, we click the retracement up here, Fib Retracement. We snap it to the tip of the candle, and all you do is pull it down and across. You can see how I'm pulling it down to the bottom of that wick there, just like that. And if you were to delete the larger one, you can sometimes overlap these. When you get the same points like this, that's a good extension and retracement. You've picked two good areas where you have overlapping, really strong areas. We don't need the daily just now. It's just examples. Again, it's still too big though. You can see if we were to go into the 15-minute, there's multiple levels in here. Like, let's just throw some levels in here real quick. You've got levels here. Change the color. Here. Here. And here. This is where you want your fib to run. So get out of the daily. What I like to do is have the daily in the background. All right, this is major level. So we'll come back to it. We can hide that for a minute. We'll just leave it in the daily. Go down to the 4 hour. I reckon the 4 hour is probably a good one, what you want to do here. Let's find a trend. This one looks like a nice trend. You've got coverage above current price, coverage below current price. It's where you want to have that range up, and in case you get a dip, you've got something to look at. So retracement from there down to there. Now, you don't have to click on the candle. Whoop, take that off. You don't have to click on the candle. Just say you don't want to take up the space on your screen. So you click retracement, and yes, this is what your dotted lines are for. You get your dotted line on top, pull it down, and you can have your fib right over the top of that if you want. Now, let's see how this looks in the 5-minute. Well, that didn't work. Just change the visibility real quick. Okay, 5-minute. That looks better. Now, for me, that's probably a nice amount. 5-minute is normally what I trade in, the 1 and 5-minute for scalps and day trades. You don't want to get it too close. You still need to do your own support and resistance. You can be absolutely lazy, but it just turns into a rainbow of Fibonacci lines everywhere. So now that I've lined out this, you just a couple of lines. That's it. So we've got a line there, and we've probably got one there, and a little one there. That's it. Oh, one more there. For now, I wouldn't trace with anything more than that. You can see my next level, I would be looking for something to come above this level and come down, then I would mark that as a resistance point, and then this would be our next one. That's how easy it is. When we go back out to the daily, you can see the difference in why we don't use the daily on a 5-minute time frame. Okay, so we've got, just say roughly, we've got, $14 versus, in here we've got versus $2.70. You're not going to get the $14 in a day. You're more than likely to get $2.70, $3, maybe $4 in a good day trade. All right. That's just levels. Okay. And then don't forget that you've got trend lines, you've got canals, you've got, we've got a flag. This is currently flagging at the moment. You can see the flag. You've got all these other things you need to look for. This is just to help you get your levels. So that's Atom at a glance. We can come back to that, but let's just move on to the next one. I've got a couple of different examples. We'll show you how to use them. For those of you who wonder, geez, I wonder what the next level is. Well, we've got it here, and you can see by pulling that 4-hour one and the daily, the next level up, or the next big level, are very close to each other. So I would use the daily, which is $71. So with that flag, crypto's going up. The next major ceiling is going to be probably $71. It's going to come up and it's going to hit the 47 again. It's going to hit the 161. Sorry, that's percent. The 54 and then the 71. It's really that easy. So I don't pull numbers out of thin air when I'm trading. It's the Fib. Fib's my friend. It's almost so easy it's cheating, honestly. All right, what do we got next? I think we've got good old ETH. Now, ETH, what you're going to look for here is, being such a large coin like this, a lot of questions is what's next? What's the next level? Sandy, how do you know what the next level is? Those kinds of questions. So this is where the extension trumps. So daily, we want to find the total chart, because we need to find the total chart to see the next big level. So what we're going to do is we can see a low here of 82. You don't have to find the candle. All you need to do is get your extension out, run your dotted line down until you find $82 or somewhere really close to it. It's probably going to be really hard. I'm going to have to zoom in. It's not going to work. Easy to find a candle. We can fine tune this when we'll zoom in. Let's zoom in later. Snap it to the top and pull it down. And then what you can do here, just pull this out. I want 82. There we go. That's closer. 82-ish. Reset the chart. What is the next level? 7,024. It's our next huge level. This would be a level where you would sell, because it's going to come down big time from that. And then we just need to find the levels in between that. But for me, trading, if it hit this level, I would sell, and then I would buy back down at a lower level. For it to push through that, well, you may have missed it, but sometimes, if they push through and then come back down. So if you want to know the levels between that, you can use another extension. If you wanted to go from here, look, from there to there, that's a swing. So you run the extension down here to here, pull it down, snap it into place, and then let's have a look at some levels here. So the level in between that is 5,447. Another big level. But you're all here to day trade. So we have our major levels. What would we use for a daily level? So we go back to the 4. You find a swing. Now you've got 2 swings here you could use. You could use the top of that swing to the bottom of this swing, because technically if you could class from there to there one swing, but you could also class there to there one swing, because you've got a low and a high here. Let's see what the difference is. Let's go from the top here to the bottom. Now look at your chart and see which one lines up best with previous data as well. Okay, that looks okay. Let's check out what this one looks like. So from the top of that to there. Seeing which one looks better. You can see we've got this line here, lines up. We've got this one here that's pretty close. But I really do prefer the first one I pulled, because it lines up perfectly across the tips of that. It's caught this brand new run up here. Bottoms are looking good. It picks up this over here. It's just shy of the top, some early sellers there. But this looks really good. This is actually the daily in the background here. You can see that blue one. So not just a matter of pulling it from anywhere. See which one looks best with current levels. All right, down into the 5 minute real quick. Let's see what we have to chart out here. Don't forget, you still have to chart some of it. So you're just looking for consolidation or where you get large peaks or valleys. There. And don't go overboard. You don't need too many. Because you go down to a smaller time frame, it's bigger again. And there, that's it. That's your levels. I wouldn't do any more than that. There's no need to. Make your trades worthwhile. You go too small with your areas, then you're shortening your trades. If you're going to day trade, then it should just be in increments, level to level. So pick the levels that you want to trade. If you're a safe trader, then yeah, chart out smaller canals. Or if you like to hang on a little bit longer, then make them bigger. Wait that little bit extra. That kind of stuff. One thing I don't like to call fib levels is really, I personally don't like to call them support and resistance. I like to call them trading zones. I do find that when I pull my fib lines, they are a lot stronger than like I've got my daily levels, they're strong, but when I pull fib lines, I find them stronger than most of the lines that I actually put in. And I think that's because everyone uses fib. It's the only thing I can put it down to. So when you hear me call breaking out or entering new trading zone, then I'm using one of my fibs to call that out. So normally something to look at, a new trading zone. That's a trading zone. A trading zone is a really good spot to trade. You can trade in between if you want. But you can just see here, if here's a nice little spot. But if you caught the back end of that flag, if you knew this was doing this, then you would be aiming probably for an entry somewhere down here. And if you caught it there, you've ridden it up. This has gone through 2 trading zones. That's a nice little ride up. And just keep moving your stop loss on the way up. So that's Ether charted out. Again, you've got to chart your trends. So you can see there, it's a descending triangle. We've had a breakout perfectly. Very easy to see all this stuff. Here we've got a flag. You can see the consolidation and it broke out. You're aiming for, buy areas. If you can pick up the trends, the descending triangle, you want to get the base, and a flag. You also want to get the base. Don't get in too late though, because a lot of the times when they hit, sometimes the 200 MA is catching up. And they'll base out, but as they continue to get further down the flag, they'll actually start bouncing along the 200 MA, and you'll actually miss a bottom. So a little bit of a pro tip there. All right, what's next? What do we have? Any. Okay. So we've got a lot of previous data on any, but there was probably a few splits in between there. So let's get some new data. So we want to see what's next. All right, so we've got $11. Now we just need to choose where we want to take this from. I don't think we need to know what's going on down in the 38 cents. Okay, I think the last run up should be sufficient. $6 seems like a nice good range to stay in. So I'm going to go from here. This one here. So we want the extension to the tip of this. You can see it's pulled those dailies. The level's very nice. That's it. That's all I would do for that. Next level from any, if it goes, is going to be around the $17. We've got little markers here for that, just like that. That's the next mark. But as we're day traders, let's go see what we can find in here. So the 4 hour or the hour, very consolidated trend here. This is good. It's actually a really good trend. Let's have a look. Let's pull some lines. I'm going to pull two here. I'm going to pull one from here to here and one from here to here, and let's see what it looks like. Being consolidated like this, you may want tighter bands for a tighter trade, tighter trading experience. Let's have a look. Clear retracement. Again, top of the swing to the lowest point, which is now. If you do want to pull to the candle, the trick is to snap it to the lowest wick and then click on it again, and you take note of the price. So I'm clicking at it at 552. You want to pull it over and make sure you match it back up to 552 right there. Doesn't look like that went all the way down though. There. Now, if I go to the 5 minute, I still think that's too big. See what I mean? We've got levels of, this is where judgment comes in. So we're currently trading $2.24 levels. Now, if you look at the days down here, we're trading $2 over roughly 4 days. So we're not going to go on a level in a day. So this is what you need to look at. Okay. So let's get rid of that smaller one. And we're going to go smaller now. Down to the 30 minute. We're just going to use the last swing. Let's use the previous one. Perfect. You can see here the 28th of September, 29th of September. So you've got almost daily levels here now. We'll go down to the 5 minute and we'll just add another couple of extra lines. One there, we've got consolidation. Again, I'm looking left to see if I'm right, if I'm lining up with things. Yep. We've got a base here. And we've got one little small level in there, and that's it. That's all I need. I've got, unless we have huge volume, I've got, just say I've got I've got nearly 3 to 4 days worth of levels just there. That's how easy it is. And again, you've got, when fibs overlap like this, a little bit of a stronger level. And the reason why it's stronger is you can see all the touches here. See that dip, that big dip, and that stop. For me, that's what I see as a strong level, is when When something stops momentum on such a hard dip like that, that's a really good level to be at. So you can see that's why we've only been trading kind of in that area up and down. You can see we had a large volume spike here. That's the only reason why it got through that line. So we do need, basically we're just going to be looking for more volume than what we've been seeing to get that to push up. It does look good. It's consolidating. I think this is actually really going to, I think we've got a bit of a ripper here when it goes. So you can see the levels are a little bit higher. We've got a really low here, but a little bit higher. Let's see if it continues to get higher, and it's an indication that it's trying to push itself up. So that's how we chart any. What do we got next? LGHL. Okay, straight out to the daily. Let's have a look at it. How old is it? All right, so it's only from last year. Excuse me. Okay. Sometimes it helps to chart out the trends and just to do a little bit extra work. I find it easier to have all the lines on there. Let's just do a quick one here. Pull the downtrend up. It's not a major bottom. So again, major bottom is where we've got lots of taps. So you can see here, this is going to be our, for me, that I would make that a black line. For those of you who don't know what a black line is on my charts, a black line would be the strongest line on a chart. So I've got yellow for daily, which is a daily level, orange for intraday, which is not as strong as yellow, but then there's black. Black is something that you want to either sell at or buy off. Okay, so this needs to be yellow. It's also good to test your charting. Put some lines up yourself and then pull a fib. See how close you are. All right, so daily levels. Well, daily levels, if you really want to see, for a stock like this, I want to see all of it. Obviously, you're not going to use all of it, but it's good practice. So straight away, I'm just going straight into retracement because we've come from a high and everything's below it. So we're going to go retracement. Down to the low. That's it. That's charted for a daily. Done deal. Okay. Daily levels. We go the 4 hour. Let's see what swing we can pick up here. I think we're too high up here. We need a smaller swing here. So we go smaller time frame. We go smaller again. I'm going to try here. Let's see what this is. It's either here or here I'm going to try. So if this is too spread out, I'll pull it down to here. Even though we've got a small top in there, I still class that as a swing from low here to top there. Doesn't matter what time frame you're in, from lowest to highest is a swing. It's just a matter of how, it's a matter of time frame really. Okay, retracement. I'm going to go from here. Now, is that too far away? 20th, still a lot. I think that's still too big. Let's go from here. See how much better that actually just looks right there? And then you can get rid of your own lines if you want. I like to delete them. So I will leave that line in. I would actually turn that line black on my chart and just make it thicker so you'll see it. Expect to see a lot of resistance here. Here you'd want to be looking for a lot of volume like this. Lots of volume to push up through that mark. This mark would probably end up, you'd actually be really surprised if this doesn't work itself into here and have one major huge push out of here. Just keep an eye on that. You can see here, just as we've pulled it from there to there, it's picked up all these levels really, really nicely. Again, don't just pull it from anywhere and just and go with it. Make sure it lines up with levels and you're happy with it. So the only level I would add to this, if I was to add anything, probably just a little one under here there. That's it. That's all I would add. Let's hope it doesn't go back down there, but that's the only real line I could add to that to be of any use. So that's LGHL. We can talk about some stocks after this if you want to know more, but right now we'll continue on with the Fib. All right, next chart, WTI. Straight out to the daily. Let's see how much we've got here. 52. We can go from extremes. Why not? Just shows you what all the major levels are. So from 2006, this will show us all the major levels. Go to retracement. Let's have a look. 15, 23, 30, 37, 47, and 60. Big levels. Lines up fairly nicely. Okay. So I think for here now, so the 15 level looks to me like it's fairly big. A lot of consolidation along it. So what I'm going to do is I'm going to choose the swing closest to that. Retracement here. That would be my fib that I would use for that area. Let's go have a look. That was from the weekly. That actually might be too big. Let's have a look. 30-minute. Yeah, you can see it's way too big. We can add another one. Let's add another one. Let's add. Oops. Now, pro tip, if you use TradingView on your phone, which I do, I like to go from computer to phone. I have all my data at my fingertips. Lock your fibs, because when you're scrolling through trying to find something on your chart, guess what you're going to move first? Your fib. And if you forget how many times you've moved it, you don't know how many times to undo it. So if you're drawing and you know you're not going to move your fib in a long time, just hit that lock button, because it makes it so much easier on your phone. I'm going to do a retracement from here. This is the last little area. Go to the 5-minute. You could roughly use that. You could go smaller, but again, I like to add my own lines. Now we're relying on a ratio. The ratio has been made up by a human, but relying on a ratio, you need to get used to looking for yourself as well, getting some good levels in there. How would you go smaller, if that's what you're asking? Let's have a look. Let's go to the 1 hour. Just go to the last trend. We want to go higher, so that last little trend that you're at, there, and you got all those little levels in there, which the 5-minute, now you're only adding like one line in there. I can't really add, there's nothing in there, kind of one there. Yeah, these are just getting really close now. There, and that's it, done. So just to recap on that, just need to keep going down in time frames and find a swing that gives you levels for 1 to 2 days, even longer. You can go, the bigger you go, then you've got to add your own lines, your own support and resistance. Just remember that. So if you're not confident, find the next smallest swing just to get you through the day if you need to. But please get confident at putting your own lines in. I can't emphasize that enough. Most charts that I chart, I won't even have fibs. I'll have them in the background to find higher levels. But when I have something that's come down, I will just use my own lines and chart out the whole chart that way. Sometimes I just prefer my levels rather than fib tends to find a lot of the peaks peaks and bottoms where my levels cut through a lot of it and it's more of an average. So just remember that. So Fib picks up peaks and lows, whereas if you were to chart manually, you normally average out through the wicks. What's next? Pult. So you can see here, this would be, we're at 100% now. So we're at an all-time high. No, not quite. Why did that get up bigger? Look at the volume on that. My gosh. I don't know why it's done that. Changes peaks like that. You can see how we're at the same level, but go to the daily and it's higher. Don't get that, but anyway. So you want a retracement on here, just pull it from the previous data. Find the lowest part of the swing. 2 cents. Oh no, that's down there. 60 cents. I hope you're all watching this thinking, geez, this is easy, because I basically watch one video. That's all I watch. One video, top to bottom. Choose your top and bottom, and that's it. Obviously, I got used to using it. I practice with it. And you find what works for you, but it's quite easy to use. Okay, that's it. That's it charted. I don't know why it's doing that. I'll take this level, but that's saying 100%. Next level for this is $23. Surely there's levels in between that. And how do we find that? Well, let's go have a look. This is what we want now. This is what we're aiming for. Right now, we want to fill. We have a gap to fill of $8. We want to know our major levels in there. So let's take a closer look. Drop it down into the 15, I think. Let's do both. Let's see how close an extension and a retracement is. So I'm going to take from, this is a swing. So we go all the way around, then it dips, and then before it goes up again, that's a swing. Okay, so I'm going to take it from the bottom here. Yeah, sometimes to find the bottom, you can use your low meter over here, or just you can run a line there, or you can just run your dotted line. It's up to you. Normally it's the first candle that touches that base, which is going to be that one there. So we get our extension out. And we're going to run it to the top and down. Okay, hasn't really worked, so let's try a retracement. Let's just pull this over, put that there, we'll see the difference. Okay, so retracement's going to be from there to there. Much better. So we've got a level in there for 1980, so you would honestly expect to see it hit that and bounce back down somewhere. Unless you've got huge volumes like here, for it to push through, it's probably just going to hit it and curl back over. And the reason why I say that is because this is a flag. If you look at the flagpole length, put the flagpole over here, oh, well, look where it ends, right on that fib line. That's another way you can work out without fibs. If I wasn't to run a fib, I would normally go and grab a flagpole, put it over on the base. That's roughly where it's going to go. Don't forget, all flags are different, so all flags leave from different areas and go different heights. General rule of thumb for flags like this, pennant flags, is length of flagpole from the base of the flag. I normally like to use the same angle as the flagpole. Sometimes they can roll over or whatever, but as a rule of thumb, like that, if you actually put that right on the base, that's actually dead on where it needs to go. dead on. So it's pretty cool how it works. Pretty cool. But there are other ways to get levels, not just Fib. Just requires a bit more experience and a lot of practice. So that's Polt on the 15-minute. I think honestly you could use that as trading zones. Let's have a look. The 5. Yeah, definitely. Definitely use that as different levels. Okay. I think that's still got a little bit to go. Maybe. Might be its last bounce, but the 200's curling over, so let's see what it does. All right, next one. How many we got left here? One left. Kern, last one. Last one, I'd like to open up the floor for questions. Hopefully you're itching to ask some questions. Okay. Always start in the daily. It's just as soon as you pull the chart up, go to the daily because the daily tells you everything. Wow, 72. Not sure if I need to know all that data. But as you do, pull their retracement. Now base is the low is 217. Somewhere 219. That's close enough for me. That's a huge base level to get through. So what are we at? Currently trading at 281. The next level is 18. So obviously we can't use any of that data. I'm just going to delete that. That's actually just be a waste of time to get back to 72. So we're going to go to the next highest. We can see this here is basically what it's been doing for however long. You can see when you pull the smaller amount into your screen, the actual candles get bigger. So we'll do a retracement from the tip of that. That looks a lot better. When you look at the data, that's a lot better. Now, it doesn't happen all the time, but sometimes when I run large fibs like this, I end up running out of fibs and I'll have to go and rerun them. So they do get up here. It does happen. AMC did it to me. I got to the top of that and it actually rode it for quite a while before I had to find the next levels. Okay, so big level. I think if we take that level from the daily is going to be too big of a price range. So we'll go down to the 1 hour. I think we just want to see levels in this bottom area here. So I think we'll just pull this one here. Highest. Yeah, you could go to this one because that's a swing. From there to there's a swing, and from there to there's a swing. So let's go to this one. Go to the lowest point. Current lowest point. If the problem with going to the most current lowest point is if it continues to drop. So you can see we've got another low point over here. If you what you wanted to do, if you want real data. So like I'm saying here is you don't know if this is finished going down yet because the 200 MA is still facing down. So this could still be coming down to this level here. We don't know. Let's use some real-time data. We have it here. We have a swing from here to here. So let's just drag that from there to there. You could use this. You could just, in times when I would use this, I would be like, so I'm not going to trade this until it comes back into this zone. Because unless you want to catch this bottom here, you don't know where it's going to go. Unless you wanted to pull it down to the bottom there. These are the hard ones. The finding the bottom or running a fib where you don't know if it's reached bottom. That's where it gets a little bit tricky. We can see this is still aiming down until. So that's the 1 hour. Let's go down. Let's see if there's any change. Okay, it's trying to push through. Okay, we've got a small squeeze here. Okay, so we finally squeezed over the 200 on the 5 minute. So somewhat positive, but we also want to see it on a larger time frame. So this is why you move down time frames. You can see here it's gone from positive to negative a lot though. But overall on the 15 and the 1 hour, it's still facing down. So to me, it hasn't quite finished its down cycle until it pushes through on a larger time frame. At least like to see the 15 or the 1 hour. And I think by the time the 15 actually got it pushed over this, it would end up hitting this level anyway. So this is going to test it here, and it's going to test it here. A good safe swing would be just to wait for it to get into here and trade it up through here. Wait for the recovery. You're catching a falling knife here potentially. So, you could get in here and it could actually come all the way back down to its low before it comes back up. Little things like that to watch out for. Again, you've got to pull it from the right place. If you wanted data, like I said, from here to here, you could use this data here for like this swing here. So old data you can still use. There. That's all our levels. Let me just zoom up on that. So you can see it's toying. Now with the fib, I don't like it. I don't like to see it come down into the red level. This green level is where you want it. Okay. See how I did pull it from the top to the bottom. This is telling me it's diving. So trade it coming up out of this level, but if you can see it coming down into this level, maybe stay away, have another look at it. See what it's going to do. Now, one little advanced technique here is finding bottoms. I have a chart for that. JSPR. Okay. So basically this thing is just flatlined and gone down. Let's start there. The previous data was that it merged here. So not a lot of data. How do we find the bottom? So IPO, it's either going to go up or down. A lot of the times they come down and settle. How do we find the bottom? Now this is a reverse Fib retracement. So we need to find a decent time frame to get us some candles. Okay. Normally to find the bottom, you're going to use the start of the trade. Okay. Obviously this data isn't here, but you want to use the start of the trade. So you use your retracement in the opposite direction. So instead of using your retracement from the top of the swing to the bottom of the swing, you want to reverse that because you want to pull your retracement down into the negative. I'll show you how you do that. So you get your retracement. So we found a low and we'll find a high. Now watch what it does here. It gets to a point here and see how the whole thing reverses. So that's how we're finding a positive in our retracement, and now we want to actually find a negative in our retracement. So let's pull this line across. Let's see how good the retracement was. Okay, so it picked up this base really well, but not so much this one. And that's okay. I wonder if we pull another one, if we get different numbers. Let's pull this one. No, it's still not picking that up. See if we can pick any up. Doesn't matter if you don't pick it up. Just trying to catch a bottom. This was actually a really good base here. So you can see we've had good support, more good support, and we've actually got good resistance under it. So this is a nice major level in here. Again, for me, I'd put a yellow line here because I like to see outside my fibs as well. Let's see what we got. I can run a retracement down. No, that's not going to work. Don't know if I'm actually going to get this. No, there's no real area that's going to show me. That one was close. But anyway, that's just an example. It doesn't always work out. Here you just draw a line in. Again, you'd be looking at indicators. You've got your, for me, it's MACD, stochastic, and RSI. And for finding bottoms, you need to be looking at those as well. Make sure that you're getting the turns that you need. A good bottom like this, I can pull it up. The RSI should have been all the way down the bottom. You can see the MACD bottomed out, and the RSI basically on the 30 there. Good entry down here. So what you want to do is remember, just a quick off topic, but RSI that's below 30 is basically supercharged negative. Just like we like to catch it supercharged over the 70 for positive, the best entry for this kind of thing is either a turn or a point. Very high risk. Highest risk is right here on the turn because it's still in that negative territory. Good entry is when it actually comes back up into the 30. This would have been best entry. We draw a line right there. Second candle right there, positive. Another little tech tip there for you. Okay, that's Indy charted, JSPR charted, sorry. All right, that's currently all I have for Fibonacci. Just a quick recap. Your extension, you pull it from a low candle to the tip of a swing or a high swing. You can be as many swings as you want. It depends on the levels. Retracement, you start at the top of a swing and find the bottom or a low of a swing to find out all the levels between the points that you've chosen plus what's above it. Reversal retracement shows levels below when you've got a large downtrend and you don't have anything further to track it. So when you've run out of candles to track it and it's going deeper and deeper into the negative, then that's when you'll use the negative Fibonacci retracement. I'd like to open the floor up for any questions now. Nothing. We've got no questions tonight. Okay. Wow, quiet bunch. Okay. Well, if that's the case, then we're going to leave it there tonight. I appreciate everyone stopping by the sandpit. Hope you've all learned something. Don't forget, check out my other videos. Like and subscribe this if you're enjoying the content. Most importantly, don't panic, chart it. Thanks for stopping by. Good night, everyone.